Alright guys, so you just saw my executions here for the day. Now I'm going to sit down here and review the entire day of non-farm payroll here on Friday, okay? So starting off in the hourly time frame, this is the highest time frame I used today. It was all that was needed. Obviously right away, we can see that we're in a deep discount below this large sell side liquidity pool right here. Okay, so sell side's been taken out of the marketplace. We're in a deep discount, and if you look very closely, you can see that we traded to this old new week opening gap. Now, why is this significant? Because not only is it a discount array, but these two specific price points, they yield fair value for larger funds. So it's no surprise that we created this type of low up off of these price points, okay? So, with that said, we have a large wick off. There's one thing that's going to stick out immediately to those that know what they're doing, right? Right here, we have a turtle soup run on sell side liquidity right here below these relative equal lows, right? And then we look at ES and Dow, we see that there's a failure swing and a failure swing. So we're failing to take out these lows while NASDAQ did. That is what we would deem as our SMT divergence, okay? So not only do we have an SMT divergence, but we're in a deep discount. Sell stops have already been taken out of the marketplace. It's Friday. We have these large imbalances left behind, so it's likely to retrace back up into that weekly range, especially with the back and forth we've been seeing. Okay, so just that underlying narrative coupled with all the signatures that I'm about to show you right now is what made this day relatively good, okay? Especially that PM session, which I'm getting to, okay? That PM session was an absolute A++ setup, okay? So, live on stream, I was real time mentioning this large wick and how this needs to be worked in before we start considering any significant movement. And you can see that right here, okay? So what you want to do is you take the low of the wick to the high, and we reference that midpoint. We want to see that midpoint worked in. That is the most precise level you will find within the wicks, is the half of it, okay? And right here you can see, yes, we fell a little bit shy of it, but it doesn't matter. All that matters is that we gravitated towards that midpoint and got relatively close to it and worked in the wick. Okay, it doesn't have to always exactly to the tick hit the midpoint, okay? So we have that. And before I drop down to the lower time frame, just bring your attention to this box here, because we use the high, low, and midpoint of this sell side imbalance to frame something inversely, right? So with that, let's drop down to that 15-minute time frame. And everything I just said with that hourly wick, go ahead and apply it to ES, or sorry, not ES, the 15-minute time frame here. Okay, half of this 15-minute wick worked in. All right. Going over to ES, we can see same exact thing. Where are the bodies staying within that old hourly sell side imbalance? Right over here. Okay, you see that? So we open on off our payroll, trade lower, and the bodies all the way up in the upper quadrant of that imbalance. And then we see the clean bodies closing at the low end here. Okay, then following that, okay, after we had that failure swing SMT, returning to, what is this? This is our previous daily settlement closing. And then here's our true day opening. So these two price points make up what? New day opening gap. So everything I just said about new week opening gap earlier in this video, apply it to this right here. This yields fair value. So once we trade here, this is where we look to this is where the algorithm would look to accumulate long positions with that SMT divergence. Okay, 5-minute time frame. If you take a look right here on the NASDAQ, this right here would be our classic optimal trade entry. So you take the high, the low the NFP made to the high, and you see that we trade down below equilibrium, but more specifically, that 62% retracement level. That's our classic optimal trade entry level. Why is it optimal? What makes this optimal is time of day. It's 9:40 a.m., so we're within that New York kill zone. That's what makes this failure swing at this time of day optimal, okay? So let me just go ahead and mark it out here. So our kill zone, especially on high impact news drivers, would be 8:30 to 11 a.m. So this is our New York kill zone. We look for all of our setups as New York traders. Okay? So right here, this entire shaded area, take that up. So from here, I'm going to actually go over to ES just because, in my opinion, it was a little bit cleaner. If you take a look here, okay, we have this 830 opening, trades below that. Okay, trades below it one more time. What's happening here? This is a classic power of three. We take that opening. What do we have? Accumulation, manipulation, trading below that opening to do what? Take out the short-term stops down here. You'll see that in the lower time frames. Work in the wick and accumulate long positions below the opening. So accumulation, manipulation, distribution. Very, very classic right here. All right. So as we can see, coming into that 930 opening here, right here, we use the 830 opening, but we recalibrate at that 930 opening. Okay. So 930 opening, it does trade a little bit lower, and if you look closely here, we have another SMT. As we can see, NASDAQ made that low at 930, and then ES failed to do so. Now what happens? We create this down close candle, and then we have aggressive expansion above not only this down close candle, but this opening range high right here. Okay, so as soon as we trade above this up close or down close candle here, that's our change in the state of delivery. This is a bullish order block. What do we do after changes in the state of delivery? We go after buy side and premium arrays, which was that large imbalance I brought to your attention in the beginning of the video. Okay, so from there, I'm going to show you the highest probable entry that I outlined in the New York session for my live stream. As we can see here, you take that 930 low to the high. We see that we trade down below equilibrium in a discount. Short-term run-on stops here. And if you look closely, once again, it's repeating. It was repeating today. Okay, look. Failure to make that lower low. Made that lower low. And ES made the lower low. So what's that again? An SMT divergence on what? This bullish order block right here. So you take the opening to the high, that range right there. That's what the algorithm is referencing within this down close candle. What's the purpose and what's the significance of us trading down to this down close candle right here? When we trade down to the high and the opening, we're accumulating more long positions to distribute them higher. That's all that's taking place there. That's why that is significant in the first place, okay? You hear a lot of guys trying to teach it, but they don't even know the significance of it or the real working mechanics behind it, okay? So I am going to flip right up to the 15-minute time frame just real quick, just to show you with that order block. We also had this small little buy side imbalance, sell side inefficiency here. See that small little gap there? So we repriced to that. See the precision on that? Okay. So with this long here, I do want to show you, even though I pointed out that this imbalance here was the main draw, along with, I forgot to mention this was the old Wednesday daily low. That we look at that as a old premium array, because us trading up to that old Wednesday low would be a complete rebalance of Thursday's daily range. So see that? Reference the 3 daily candles right here. Trading up to that old Wednesday low right there. That's a complete rebalance on the daily time frame of that Thursday daily range, okay? Anyway, whenever you have a large hourly imbalance like this, that's whenever you go down to the lower time frames and you key in on that and look for the 15 and 5-minute inefficiencies within that for targeting purposes. So in this instance, we were looking at this initial 15-minute fair value gap right here. So this was the main draw, okay? So back down to the lower time frames here. We already have all our narrative and everything outlined here that we need to know. Now what do? We go down to that 1-minute time frame to look for our entry. So let's do that. So we have a run on stops to equilibrium. We have the SMT divergence. And what are we still within? We're still within that New York kill zone. Off that 5-minute order block and inefficiency here, we have that aggressive expansion above the swing high here. So we have a market structure shift. We have this specific fair value gap left behind, and we reprice back down into that. This right here is where you pull the trigger and get long. Where's your take profit? This imbalance right up here. And what else? What's this right here? See how clean these highs are? Classically known as engineered buy side liquidity highs. So see how they purposely placed those in, traded off, and then boom, traded right through it for those that trusted this as support. So this is our buy side liquidity. Alright, so this entry right here was the most high probable entry point that I outlined in today's live stream. Okay, so this right here, and let's see how much this offers. So let's say you got in at 5225 and you exited right here. What's that? 15 handles, more than enough. Okay, alright guys, so on to the PM session here, which in my opinion was the cleanest and yielded the highest probable setup, at least for me, which is where I just happened to make the most money of the day. And starting off right away, back on that hourly time frame, as we can see from the New York session, we had a very large move to the upside, driving us up into a very deep premium. Okay, if we take our fib high to low, we see that we're above equilibrium, up into and above this 62% retracement level. This is classically known as our optimal trade entry. Okay, so we have that, and take this off. We can see that we're in the upper quadrant working in this sell side imbalance. And then if we go to the 15-minute time frame, we're specifically looking at this 15-minute sell side imbalance, buy side inefficiency that we priced into almost completely and had multiple 15-minute closures at the high end of it. Why does this one hold more importance than all the other ones? Okay, this one, you know, there's multiple fair value gaps. Why is this one so important, and why are these closures up here so important? Because if you take our fib once again, you find equilibrium. Which imbalance of the bunch is the most prominent? Which is the first most prominent inefficiency above equilibrium? It's this one. So this one holds the most importance in my eyes, okay? So we have that. We create this 15-minute swing high. I am going to go up to the hourly time frame one more time here just to outline. If you take this up close candle here, this will be our last up close candle. This will be our bullish order block, or sorry, bearish order block. My fault. And if we go ahead right away, we drop back down to that 15-minute time frame. You can see that we can refine that hourly order block to this 15-minute. These two consecutive up close candles, that makes up our 15-minute bearish order block. And as soon as we trade below there, right here with this down close candle right here, notice how we aggressively expand below the opening of these two up close candles here. The wicks don't matter. All we need is a change of the state of delivery below the bodies here. As soon as we have that, boom. That's the change of the state of delivery, and we're going to start looking at lower targets. What are the lower targets that I was looking for? Well, for me, it was the lowest hanging fruit, okay, which was this opposing bullish order block right here. So I knew it was likely for price to reprice down into that. So we have the opening and the high. Those are the two very specific price points that I'm looking at. And how am I using this for targeting purposes? Because the algorithm refers to and draws to opposing discount order blocks when we're in premiums like magnets. Okay, so this was my target. And then if you see this imbalance within that, I'm specifically looking at the midpoint of this 15-minute fair value gap within that order block. Okay, so those are my two take profit levels right here. Okay, so let me switch that. So let's drop down to that 5-minute time frame, and as you can see here, once again we have that change in state delivery trading below the opening. Right, I can take that off. We already have that established. Okay, we create this intermediate term high here, so we have a swing high here, swing high to the left, swing high to the right. And where is this swing high created? See this 5-minute fair value gap here? Okay, so we see that. So we have a repricing up into the 5-minute fair value gap, and now what is taking place? What are these two up close candles as well within that 15-minute? Well, take the midpoint. These two up close candles makes up our bearish order block. And if you take the midpoint, drag it out, where do these two bodies close at? Right at the midpoint. Okay, that's not a coincidence. This isn't cherry picked. It was traded real time. Okay, now along with that change in the state delivery, we also have this market structure shift below the swing low. Okay, return to the fair value gap, classic 2022 model. All right, And now what happens? This is the very, very key part of the equation here. We're entering, number one, that PM session kill zone, which is simply just 1:30 p.m. to 3 p.m. Okay, so this is our PM kill zone. Now, as soon as we enter that, we create this up close candle off of the order block I was already mentioning. So what does this turn into? This is a propulsion block. And now we have that aggressive initial displacement below that. We have another change in state delivery here, so that's our propulsion block. And now what happens? Look what happens here. We open and wick up right up to that opening to do what? Accumulate more short positions to distribute them down to our lower targets. Okay, and then if you look here, we see we have internal sell side liquidity resting here. Okay, these relative equal lows. And let's just go ahead and drop down to that 1 minute time frame. Okay. So, entering the PM kill zone, we already had all of our narrative and everything was just outlined to you on the higher time frames that we needed to know. Now all we need to do is take an entry. Okay, so first entry was at that 5 minute order block. And what do we have within that 5 minute propulsion block / order block? This small little 1 minute for value gap with the displacement. That right there is the highest probable entry point you will ever find. Okay, a 1 minute for value gap within a higher time frame order block. Okay, so that was the first short. I added one more right here, but if you look here, it's I got it at 18,355. It took me out at 18,351. So I took a little bit of profit there unintentionally. Okay, so I initially put the order right on. Take profit was set really close, and as I was adjusting my stop, it just went straight through my take profit. So all I did was wait for another retracement. Boom, we retraced up into this down close candle. That's where I went short again, because I was looking to do 2 contracts due to how high probability this setup was in my eyes. Okay, so there's the second short right here. Boom, got covered right here at that order block, then got covered again down here. Okay, so very, very simple logic surrounding this. And yeah, this pretty much concludes the review here. And one more thing I should add in is, okay, I took a $500 loss here earlier, and this here was about $100 gain of a short. And then yeah, that pretty much does it here, guys. So I hope you guys learned something here, and I'll be seeing you on Monday.